Welcome to the Insurtech Show, where we explore the latest trends and innovations in the insurance industry. In today's episode, we take a closer look at the evolving role of CFOs, Chief Financial Officers, in insurance companies and how they're using automation to support these new demands, and also the challenges posed by regulations such as IFRS 17. We have an exciting lineup of guests who are going to share their insights and experiences in the industry and at their organizations. First up, FF's Ali Patterson caught up with Liza Richardson from Aptitude Software, who are a leading provider of financial management and accounting software solutions. Their tech enables companies to manage complex accounting processes, meet regulatory requirements, and gain better insights into their financial performance. Simon Pink from QBE Ventures also joins us from the O2 in London to talk about the impact of automation in the insurance industry and how CFOs are looking at digital transformation. Last but not least, FF's Tim Goodfellow travelled to Bergen in Norway to speak with Kvikk Insurance to find out how insurers in the Nordics were also facing the regulatory changes. So stay tuned as we dive into this exciting topic and hear from our expert guests on the front lines of innovation and change in the insurance industry.
Let's talk a little bit about the CFO, because 10, 15 years ago, the CFO was almost regarded as a glorified accountant, and now the CFO arguably could be almost like the CEO in waiting. A lot of CFOs have kind of made that transition, but they've got a lot more on their shoulders than just filing the accounts. There's various regulations they've got to adhere to and such. What is, from your perspective, the role of the CFO today, but also what keeps them up at night?
Yeah, no, over the last few years, and I think even through COVID, that's really, expedited the process, I think, as well. The role of the CFO in an organisation has changed to be much more of a strategic leadership role than just a controller role. So back in days of old, it was very much about controlling, historically looking at your numbers and making sure you were reporting them correctly and being able to, say, here's my statutory accounts, report to the shareholders, all of those things. But also shareholders aren't just interested in knowing, okay, this is what you've done. They want to know what you're going to do and whether, how does that play out and how does what you've investigated, what you're looking at, all of those things. So I think the role of the CFO has very much changed from a backward-looking role to a future-looking role. And they've very much, finance is seen to be a partner of the business now rather than just an overhead of the business, which was often how it was, it was kind of a necessary evil before. Whereas now it's very much more a partner, helping with those strategic decisions.
What are some of the kind of decisions that you've seen CFOs be in charge of making and following through?
I think, even down to organisational change and helping to restructure organisations and things, because you're looking at, okay, business is moving in this direction, or this is the direction we want to go into. So, helping through budgets and through alignment of how you're going to restructure the organisation to meet that. But also, I think there's, it's much bigger than that, just in terms of they're really, really looking at the strategy that an organisation needs to follow. What are the markets doing? They're looking more globally. They're looking at, not just the little market they're in right now and thinking about just optimising expenses or something. They're looking more broadly at how you're doing things. The opportunities to outsource things, all sorts of stuff now come into play. You've got to be thinking on just even if you're a small little local business, you might have your back office in Manila using an outsourcing operation or something. So there's all of those things. You've seen lots of, outsourcing take place in the insurance industry over the last few years, and where they're bringing in organisations to, manage closed books and all sorts of things. And the CFO would have been instrumental in a lot of those decisions.
The CFO was the role that has expanded the most within the company. It used to be more of a fancy accountant, for lack of a better term. The CFO was more of an island in the ocean and the only person who really knew anything about the business, about the finance side. And then, of course, a boat would come into that island every time someone needed to know anything about the financials. But apart from that, you were mostly left alone. Now, I think you need to be tech savvy. You need to be forward leaning. You need to understand what the CTO is doing. It's merging more with, let's say, the COO position. the lines between the CFO and the COO, I would say, is much more blurry now than it used to be. So being a CFO, I think, is becoming more and more having to be a jack of all trades, sort of, instead of just specialized in finance. You still, of course, have to know finance, but it's not the only thing. It's not enough to just know the financials. You have to be able to contribute on the rest. I mean, especially in the Insurtech industry, it is essentially a combination of finance and technology. So if you're a CFO in an Insurtech company and you are not tech savvy, I would say you're probably in the wrong industry.
Yeah, sure. I think that's a fair assessment. And how does your role affect the strategic decisions of your company, Kvikk Insurance, and what are you hoping to accomplish with the team going forward?
I mean, we're a startup, we're a small team, so everyone at the C-suite and of course everyone in the company will be instrumental to the strategic decisions going forward. But being the CFO, you're supposed to always be the person who knows what are the financial implications of making that strategic decision. So I think that having the CFO there in decision making is absolutely vital to a company. And I also think that, especially for startup companies, the CFO is the role that kind of comes in last. It comes in after your second round of financing, when everything is starting to work out. And I think that a lot of startup companies could probably benefit from adding on that competence from an earlier stage. And I see a lot more companies that do CFO support, that do CFO for hire, but just part-time. And I think that is probably an invaluable addition to a startup team, having from the get-go that competence on board, especially when it comes to fundraising. Because, I mean, the founders and the investors speak different languages, essentially, and the CFO can be there and translate. They can be the interpreter between what the investors want to hear and what the founders want to present. So I think that going forward, especially in the startup world, the CFO role will become much more integral and not necessarily be the role you tag on when you have enough money to purchase someone out of accounting or out of consulting. Once you have the funds to pay them a lot of money, you will try to add them on earlier.
You know, at QBE, how do you see technology changing the role of the CFO? I'd love to get your perspective on that.
I think two things. I think firstly, technology, we're all as generations, we're all a lot more tech savvy now.
Yeah.
I think there's elements of technology and smart tech coming into play that's making just smart people even smarter. So low code, no code type capability, where actually you've got underwriters that can now do data science. And we've got this proliferation of data scientists who are not data scientists, they're just smart people that know what they want to achieve. And the platform they're using is enabling them to do that. Underneath the covers, it's doing some pretty smart data science work. So that we're kind of raising the bar, the skill set, if you will, and capability inside the organisation. And the second point, I think that reflects on the CFO. So the CFO is absolutely open to that and keen to spend and invest in that. And again, there's ventures where ultimately work for the CFO of QBE, and it's his particular vision that's made this happen. So there's an acknowledgement of actually we can and should do different things differently and behave differently.
Yeah.
It's not enough just to give a group of folk a pot of money and say, you go and have fun. It's actually, let's carve it out differently, treat it as a separate business, and support it. Don't leave it out on the vine to rot. Actually support and nurture it. And I feel that's an insightful thing for the CFO to actually decision to make and actually to ultimately support. So I guess the point is there's a skill set and there's a mentality that's changing, certainly from the CFOs I used to work with many years ago.
Yeah, it really is amazing to see that it has almost become a different role because of technology, and typically a role that has never been anywhere near that side of the organisation.
Yeah, absolutely right. I think so. I've come from a technology services and consulting business, so where the CFO would be the last person to get the message, and so there would be huge deals that would be worked through, and ultimately it would have to get onto the CFO's desk, and it would all be a surprise. I think now we've seen a shift where actually the CFO and their teams are a lot more engaged in kind of those transformational type discussions, which is right, and rightly so. It's one of those things, why didn't we always do it that way? And yeah, we do now.
What's the benefit of looking at accrual accounting, and particularly various regulations and bringing them together?
It's just a way of standardising, recognising revenue. So the idea is that then you can compare it across different industries because you're recognising your revenue on the same basis, which is all, and it's all to do with the way you're treating the contracts across different industries. So IFRS 15 was the first one that came about, and that had major impact on the telcos, and that was about revenue recognition. 17 is purely for insurers and trying to align the way they recognise their revenue so that it's the same as everyone else. But yeah, cash versus accrual accounting usually means you get to recognise your P&L faster, but rather than wait until you've physically got the cash. That's often the biggest difference.
Sticking with the insurance industry as a whole, obviously there's a lot of regulations. How are you helping specifically that industry, and what's been some of the results that you've seen?
So, as I say, 17 has really driven a change because you've not been able to take your numbers in a more aggregated form, which is traditionally what the insurers have done. They've just got to feed at some aggregated level from their policy admin systems and claims admin systems. They've not needed to do any accounting from the actuarial system. They're just given a provision from the actuaries and do the provision. That's really, really changed because now they need to evaluate at a policy level or a group of policy level whether something's profitable or not based on what those projected cash flows are, and then based on any adjustment for what really happens in the real world. And so you've got to operate at a much more granular level in order to be able to make those assessments. And that's just, this standard has enforced that. And you've got differences with that standard compared to, for instance, Solvency II. So trying to line all of these things up so that organisations can have a consolidated view of their numbers, I think is really, really important for them. And I think moving forward, everyone's been very focused on 17. They were previously very focused on Solvency II. The next thing's going to be, right, how do I bring all of these things together and look at them in a consistent way?
Financial reporting changes across the world. It means greater insight for a lot of companies, but it also means higher regulatory burdens. What does that mean for Kvikk, and is it ultimately a net positive?
So that's a very good question. It would, in the short term, it will always mean that scaling to new countries becomes extra difficult. You're much more dependent on having local competency, getting a local organization in place to be able to scale to, let's say, the UK, for instance. If we want to, or when we scale to the UK, we are in much larger need of having people on the ground in the UK who knows the regulatory side. Of course, having chosen the Insurtech business, we always knew that we haven't chosen the easiest path when it comes to regulations, but each time they add on a little more, yes, from a compliance point of view, it's great. We want to prevent money laundering. We want to have everyone compliant. We want it to be as clean as possible. But at some point, the cost becomes too large for it to make sense. And if the cost becomes too large for it to make sense to scale to, for instance, the UK, companies will stop. Leaving, of course, with Brexit and everything, having all that new legislation coming along in the UK, it will be interesting to see if, for instance, Norwegian, Nordic companies choose to go to the UK, as was very natural for us for a very long time. The language barrier is low. It's a somewhat similar country. Will we now instead go to Europe, where we can just pass under the European legislation and have a bunch of countries with the same legislation, the same reporting standards? It would be interesting to see. It is, for us, it would have been way easier to scale to the UK pre-Brexit. Yeah,
no doubt. Do you think that with the financial reporting, the potential data that you can gain from that and from the insights that you can gather from customers, is that ultimately a good thing for your business, and that's something that you take into account?
Yeah, it will always, the more information we have, barring GDPR concerns, etc., it's more data is, as long as it's quality data, will always be better. And more customer data, especially when it comes to the insurance market. That's essentially what drives loss ratios and drives pricing. So we do need to use that data to the best of our ability. But I mean, it does always come at a cost. Take the banking sector as an example. There are hundreds of people in each bank who are employed to just make sure that they're compliant and on the anti-money laundering, etc. And they're all just trying to run behind, trying to keep up with the latest legislation, similar in the insurance industry. So at some point it becomes a race to stay compliant, and you lose track of what is the reason we're doing all of this.
Talk a little bit about your predictions for the role of the CFO in insurance moving forward. What are some of what you mentioned about bringing various regulations together, about looking to automate various reconciliations. Tell us a little bit about some of your thoughts for the future.
So I think moving forward, KPIs are going to be a big thing. They're going to have to change because, your P&L numbers are going to change moving forward. So the way that you're evaluating your business will change, so therefore that will impact KPIs. So, that's an obvious one. And I think as they're starting to see the results from 17, they can now start thinking about how they'll set those KPIs and things based on that, and that will definitely have impact. I think the other thing is there's real pressure for the insurers to actually become more efficient. The new players into the market, the Insurtechs, don't have all the legacy and overheads that your traditional players have had. They're able to start immediately on a more streamlined basis. So I think every area of the business is going to be looked at to actually how to make it more efficient, and finance is absolutely going to fall under that scrutiny, and they're going to really need to look at how to automate more of their processes, how to get rid of all of those manual processes that take time now, and know that the data's controlled and that the results that have come out are right without having to put all those manual reconciliation processes around them at the moment. So moving to that more granular view of the world. And also moving forward, if you've got that granular data and we start talking about then forecasting things and looking at the role of the CFO or the role of finance as your business partner, being able to have detailed data to do trend analysis on and look at things, that's going to give you a really great platform to move forward and start looking at those things and applying, it could be, AI algorithmic type things that you then start doing automated trend analysis based on the data that you've got, and look at projections forward and where you see the market going.
And that's about all we've got time for in today's episode. Thank you so much to our guests for your insights. It's been such a pleasure hearing about where the industry is heading. And also a massive thank you to you, our viewers. You can catch the rest of the series and so much more over at ffnews.com and of course YouTube, but especially LinkedIn, where you'll see me, Doug McKenzie, in the comments. Thank you very much and goodbye.